Welcome to the Wall Street Lab podcast, where we interview top financial professionals and deconstruct their practices to give you an insider look into the world of finance. Here are your hosts, Lucas Muzialski and Leo Severino.
Hello and welcome to episode number 21 of the Wall Street Lab podcast. And today we're going to be discussing ship financing. It's quite an unusual topic. However, I believe you would be surprised if you found out how many banks or hedge funds or other financial institutions are investing in that space. Ship financing is pretty often compared to real estate as an alternative to this asset class. However, it is pretty volatile. I'm sure that our guest today will do a way better job at explaining how the cash flows as well as the models and ship financing actually work. In order to tell you more about the topic, this week on the show we have Olaf Danckwerts, who has spent many years working for banks and financial institutions in this space and recently founded a company in the shipping industry. In our conversation, we start from the very beginning, explaining what shipping is and how it ties into the global financial ecosystem. Then we jump into many different topics, such as how volatile shipping is, what kind of financial structures are used very often by banks in this space, as well as topics like how does piracy, for example, affect the business. So I hope you will enjoy this interview. I surely learned a lot about the space, and I hope you will as well. If you like this show, please leave us a 5-star review on iTunes. We really appreciate this. It really helps us to grow this show. And now, without further ado, please enjoy our interview with Olaf Danckwerts. Hello, Olaf. Thank you for joining us on the Wall Street Lab podcast. How are you today?
Thanks, fine. So thank you for inviting me, Luke, and I'm really appreciating the opportunity here to talk with you in the Wall Street Lab.
Thanks. So we usually start these interviews with a brief introduction to the background of the person we're talking to. So maybe before we jump into shipping, before we jump into the topic at hand, could you give us a brief introduction into yourself and what your career path was to the point where you are now?
Yes, sure, I can do so. So I've been working for quite a long time in the banking sector before I studied law, and so I'm coming from the restructuring side in the banking sector, and there was a time when there was a strong need for restructuring experience on the shipping side in the banks, and there I got the opportunity to get to know more about it. And so later on, I was so curious regarding shipping and asked myself if I want to enter this business really, or if I just want to see it as a sidestep. And I decided to do more in ship financing. And this was finally the reason why I moved to Hamburg, because then you are very close to the whole community and get to know much more about the background and about all the things that are going on there. So finally, this was the way how I entered the ship financing sector.
Okay, I see. So let's jump into ship financing. Because I feel in the traditional world of finance, you wouldn't necessarily jump straight to shipping. However, it's a very connected topic because shipping needs a lot of capital intensity and only larger institutions can provide that. Can you tell us a bit how shipping and finance can work together? What is the background here? What is the kind of everyday operations that you could be expecting when working in the shipping finance industry?
Yes, I can do so. So I think it's to understand ship financing, it's always very important to understand shipping because, of course, these two or the industries are connected with each other as one of them is financing the other one. And so I suggest that I tell you a little bit more about shipping in general. Then it's easier to speak about the financing side further on. Talking about shipping, you have to keep in mind that this is a really global business. 90% of the world traded cargo volumes are transported over the seaway. And so it's also a very mixed industry. You have always to keep in mind that there are different segments of vessels that are traveling over the oceans. So, for example, there's one type, it's the bulker, where you put in coal, iron ore, and all these commodities. And this type of vessel is mainly used, for example, to still the appetite of Asia, the Asian industry to produce finally, or to produce steel that is then used in the building sector. And on the other side, there are the tanker vessels. I think I don't have to explain that. So oil is transported or chemicals are transported over the seaway. And furthermore, we have, of course, a lot of the container vessels that finally are working in another way than the vessels I just mentioned before. But all of them, you can say, reflect the productivity of the global industry places. So usually you have these bulk vessels transporting coal and iron ore to Asia. Then there are the production in Asia is going on. The products are put into the container, and then these containers usually transport the prepared goods to the States or to Europe, and this is working in another way than the transport of the bulk. And so, in general, you can say that shipping really reflects the global industry. We have a high standardization in shipping. As you can imagine, the specific knowledge to transport coal or iron ore is not so high. And further, we have already this transportation over the seaway since decades or since hundreds of years. And so there has been created a standardized approach regarding the freight insurance, ship insurance, and all these things around the industry. As you also can imagine, the freight rates are changing during all this time. So we had a time when there was a lot of freight transported from Europe to the States. We had a time when there was a lot of freight transported from South America to Europe, the other way around also. And at the moment, of course, it is mainly Asia where goods are produced and then delivered to the States and to Europe. And of course, on the other side, you have also the car industry, for example, that is mainly based that is strongly in Europe. And a lot of cars are transported, for example, from Europe, Northern Europe to the States and to other places on the world. So it is a very mixed industry. You can find some indicators how you measure, for example, the developing on the shipping side. One very well-known aspect is the Baltic Dry Index. This Baltic Dry Index, BDI, reflects the charter rates on some special segments in the bulk sector. And this has been used in the past as an early warning indicator for the global economical development. And just to give you an example, this Baltic Dry Index was in the boom time of the shipping. In June 2008 or May, it reached a level of nearly 12,000. And only half a year later, when the Lehman crisis, the banking crisis was starting, it decreased due to 660. So this is there you can see the volatility also in the charter rates of the vessels. To make this a little bit more, to put some figures to it, a Cape-size bulk vessel, one of the large vessels transporting coal and iron ore, costed in May 2008 $130,000 per day as a charter rate. The same vessel was able to be chartered 6 months later for a price. I'm not totally sure, but I think it was something about $5,000 per day. Mm-hmm. And so nearly the level when the break even of the costs that have to be paid for the vessel is reached. So this reflects, I think, the volatility very impressive.
Mm-hmm. There are so many points I want to follow up on here, but maybe let us start with regarding the finance aspect of the shipping business. Who are the major players that are involved in these transactions? And maybe you could give us a little bit of insight into how transactions and ship financing take place.
Yes, of course. So what I just described before was just the shipping side. Then on the other side, we have this connection to the financing side. And you have in the past, so until approximately 2015, nearly 70% of the whole ship financing done by banks were based in Europe. So it was very strongly driven by European-based banks, and the banks that were able to participate from this boom that took place from 2000 to 2008. And you can imagine when you order such a vessel as a new building, it takes time between you order the vessel until it is delivered. And so in today's days, the loan is paid out at the delivery. During the boom time, when there was a very strong competition for new projects, we have even seen structures that the equity that usually has to be paid into such a project has also been financed. And furthermore, there has also been a financing of the building time of the vessel, of the construction period. And so finally, this was only done when it was booming. And as you can imagine, problems were coming out of this. When we entered the crisis, still the order books of the yards were filled with new building orders. There were many yards that wanted to participate in China from this boom. So at the peak time, we had around 600 yards only in China, and many of them were so-called greenfield yards. And so it was possible during this boom time to order a vessel, to get a building contract with a yard, and then it was possible finally even to trade just this contract because there was such a massive shortage of building places. And the financing sector was following this. Finally, it's as always, the financing sector reflects the economy behind. So the European-based banks were entering this market or were participating in this market really by financing the ship owner. Many of the ship owner were also based in Europe and are still based in Europe. So there was a close relationship between the ship owner side and the financing partners. This industry were massively driven by Europe. And now, in these days, this changed. Today, approximately still 60% of the whole financing volumes on vessels are given by European-based banks. But this is decreasing. So now in these days, the Asian financing industry enters the market. For example, we have seen a lot of transactions with ECA guarantees, so finally guarantees given by the states to support and to subsidize their shipbuilding industry that have entered the market during the last years. Further, we have seen a lot of sale and leaseback structures, financial lease structures. And this is also done mainly by the Asian players. The reason is quite simple. The European ship financing industry suffers under shipping loan portfolios that are mainly distressed. And so they have to adjust their portfolios. They have to get off the portfolios. Some large players out of the past, they quit the market. Very large banks, also one of them was even in the past the largest ship financing bank. They took the decision and said, no, we don't finance any more new buildings. A few of the banks call this adjustment of portfolios. A few of the banks say, no, we are leaving this industry. The reason is also on the banking side, very easy to explain. It's not just the amount of distressed loans. It is further the adjustment regarding the new regulatory requirements that are coming from Basel III, Basel IV, where finally higher equity portions on the loans have to be brought in from the bank, and the risk-weighted assets RWA management has to be specialized. And this makes in general the loans, the financing of our vessels more expensive, and then it's not any longer so interesting for the European banks.
Mm-hmm. And is it only banks that are financing these kind of enterprises, or are there also other players in the market?
There are also other players in the market. So finally, after the crisis started, we have seen a lot of funds entering the market, hedge funds, and they have seen the opportunities to order vessels for prices that were far below the prices we have seen during the boom time. And in the past, shipping was always a cyclical business. In the past, we have seen most of the time cycles from about 3 years of a boom time and of a depressed time. But this time now we are talking about 10 years because it was such an incredible boom before. And so many of the funds, when they were entering the market, they had in mind that the recovery would come soon, but it didn't. It took much longer for a recovery. At the moment, we are on a good way. We are on a sustainable recovery way, and but a lot of the hedge funds entered just too early in this market. What we have also seen is a lot of, you have always to differ when we are talking about financing, for example, of vessels for a container liner company. Then in most of the cases, we are talking about a corporate structure, corporate financing, where at the end of the day, yes, the vessels are part of, but it's not an SPV financing. And when we are talking about financing of, for example, ship owners that are based in, often also in Greece, but also in Germany or other states, we are quite often talking about SPV financing, where you have the financing of just one or two vessels, and then you are secured on the vessel with a first lien mortgage. You need a lot of maritime knowledge to handle this, and makes it a little bit comparable to financing of real estate, because it's a quite safe and secure financing. And these are also structures where insurance companies or pension funds are interested in, have been interested in. I would like also to add that at the moment, the parties that have been interested in are very cautious because they also had to collect the experience of a few losses coming out of the boom time at the end of the day. But I'm absolutely convinced that they will come back because this is an underestimated asset class when you compare it with corporate loans, with other project financing structures, or real estate, of course. So I think they will come back.
I find that really interesting, the reference that you made to the comparison to the real estate. I feel that many people in the industry that I've been talking to have made this comparison. What would you describe the objectives of the both lenders and borrowers in the shipping industry? How do you see that their objectives are different from investors or borrowers in the real estate side? Because there must be some differentiating factors. Of course, I understand that part of the reason to go with the shipping industry and not real estate in this case is obviously a diversification of your portfolio. But at the same time, what would you say are the biggest changes in objectives of these parties when moving from real estate to shipping investments?
Mm-hmm. When we are talking about shipping, it's a global business. It's quite standardized. I think I don't know exactly, but absolutely the majority of all contracts and documents are based on UK law. And so you have a standardized legal system, jurisdiction with UK law. And so it's quite easy for example, an Asian investor also to invest into a vessel that is handled from a European operator, the other round also. And when we are talking about real estate, you have always to consider legal system and the jurisdiction. And I think this is a very strong difference that we have to take under consideration when we want to compare it, because the real estate markets, they are not global markets. Of course, it is possible for investors from Europe to invest in Asia, and they are doing this, but it is not so easy. So I think they have to do much more clarification, due diligence on the legal side also. And this is not necessary in shipping. So it's also it's the same when we are talking about the, let's say, the cash flow side on the project. So finally the cash flow from the shipping is coming out of the employment of the vessel. And so the contracts behind, the freight contracts, the charter contracts, they are also very highly standardized. And there's a lot of transparency regarding the charter rates and the possibilities to employ the vessels. In general, we have in shipping a very high transparency also regarding the vessels, the prices, and all these things. So we have a very clear, transparent market. And I think there we differ from the real estate sector. That's not so transparent.
Mm-hmm. I find this interesting that you mentioned that the laws are very unified. As you mentioned, that most of the contracts are written and executed under the UK marine law. I would imagine that could also affect potential investors in a way where, is it not more difficult to resolve conflicts or issues when there are courts involved or there are certain conflicts between the ship owners and the investors? How do these issues get resolved, and does any specific country's court law apply to these issues?
So when you have, for example, when you have something to solve that is based on the UK law, there's the way to finally you enter into discussions with specialized law firms, legal advisors. Many of them have a UK background, but they are finally active globally. And they give you the advice to speak to the arbitration court in London. And this is finally the way how the problems are solved. So we have seen in the past, especially during the crisis, we have seen a lot of arbitration in London where yards and new building buyers were in discussions about the specifications of the vessels, as one example. Something else is, this has also to be considered when we are talking about the legal background. Something else is when you want to arrest the vessel, and because you are entering the reinforcement procedure. So then you have also, of course, to take care of all the legal background, but you have also to take under consideration where the vessel is trading. So when you want to arrest the vessel, for example, in a country that has also a close relationship, might be out of the past with UK, then it's usually quite easy to go into this procedure. But you have to be very careful that, for example, your vessel is not arrested in a jurisdiction, in a system that is unexperienced with reinforcement of vessels and the auction procedure. And there are also some systems where you have to be very careful that the vessel is going through this procedure in an acceptable period of time. So as you can imagine, the vessel costs everyday money, and the operation expenses are high. You have to pay the crew, you have to pay fuel, bunker, and of course the port authority has to be paid. And so when this procedure takes a long time, it costs you, when you are a lender, it costs you tons of money. And to avoid this, there are some, we call it friendly jurisdictions. Of course, they are friendly out of the perspective of the lender, but they help you to go through a straightforward process when it is necessary. But I think this is a a niche business, and it is also part of the maritime lawyers and the companies there. And there you once more take advantage of the global system, because the UK law is working under these aspects. And this is very helpful for the whole industry, and it's definitely necessary.
Mm-hmm. And I mean, looking at the industry, doing research before jumping into this interview, you find that there are really many companies like with big names that regular people have not heard about. Everyone heard about the big tech companies, everybody heard about the big banks, but there are huge companies in the maritime industry which are making revenues similar to these tech companies or these banks. However, they are staying under the radar. Could you maybe tell us about a few companies in this space and their activities in this space? What do they focus on?
Mm-hmm. Yes, of course. So, for example, when we are talking about these companies, I think we should speak about the container liner companies. Might be these are even the companies that are most visible for people that are not participating or that are not so familiar with the ship financing or shipping industry. Because many of us know, for example, the container boxes, and on the container boxes, quite often the name of the liner companies are written. So we know, for example, many people know Maersk as the largest container liner operator based in Copenhagen in Denmark. Many people know COSCO as an Asian example, or Hapag-Lloyd based in Hamburg. And so there are these container liner companies. Usually we have to keep in mind it is their service to transport container boxes with a vessel from one port to another. And they are working like I always say, it's like a bus lane. So they are starting, as an example, in Hamburg, then they are going to Rotterdam. Then boxes are loaded off, are loaded on, then they're going to the next port. Further boxes are loaded on and off. And so this is the way how they travel, and they arrive, for example, in Singapore. But then usually they have to assure that one of their vessels is arriving, let's say, twice the week in one of these harbors. So this is they are traveling in a line like buses are coming. And these companies usually, during the last years, there has been a lot of M&A procedure. There have been alliances, like in the aircraft industry, because they wanted to optimize their liner services. You can imagine when you are larger, when you have more vessels, it's easier for you as a company to give your clients the security that your vessel is arriving twice the week in the harbor, to collect the boxes of your clients and to transfer them, for example, to Singapore, and the other way around. When you are only one company, you have to be larger, you need more vessels, you can't have these scale effects. And this is also the reason why during this crisis now there has been a lot of optimization of these services to just with one aim to become more efficient. And another aspect under this increase of efficiency is that the vessels were growing. The vessels are getting larger and larger. So at the moment, most of the very large new buildings in the container sector have more than 20,000 places for container boxes. This is an incredible amount. But you can use these vessels only on special liner services. So these vessels are typically used Europe, Asia, and the other way, of course. There are some other regions where you are trading with container vessels. One example is South America, the east coast of South America. There you can't enter with these large vessels into the harbors, and the harbors can't increase their capacities. The reason is quite simple. You have a lot of cliffs and stones around these harbors, so that the maximum size of the vessels that can enter there is something around 10,000 TEU. But this depends always on the harbor where you're going to. And then there are other aspects that impact also the size of the vessels in all segments, the capacities of the channels, of the locks and the channels. So this is also the reason why there are a lot of vessels. They have a name like the Panamax vessel. So this is the maximum size that can be handled in the Panama Canal. And you have also a Suezmax, and this is the maximum for the Suez Canal. And so these are the things that have a strong impact on the industry. I've been talking now a lot about the container industry. Let's look in a very short way to the bulk industry. The bulk industry is very much driven by the commodity traders. So please keep in mind there are very large commodity traders, and they need these vessels to transport, of course, the freight from one harbor to another. And they are not working in a liner service. They are just offering their service for the freight. So when you want, for example, to transport huge amount of grain from South America to Asia, then you book, for example, a travel for Capesize bulker just for this freight. But you don't have time charter for the vessel. This is not so common. Usually it's just for the freight. And this is also the reason why the cash income for these vessels is not so stable. It's more volatile because it's reacting more also on seasonal changes. Finally, when you have to transport a lot of grain from South America to China, many of these vessels are needed. But then there's also the time when there's no more grain that has to be transported, and then the vessels are unemployed, and the charter rates are decreasing, of course. But this is also a difference how to handle the vessels. Perhaps something else I would like to add when we are talking about tank vessels, it's also different because ship operators of tank vessels, they need a special qualification to secure that no environmental accidents are coming out of their operations. In the past, we have seen very, very large, catastrophes, environmental catastrophes. And the outcome is that there are very strict rules also regarding the crews on these vessels and how to handle the vessels. And the large oil companies, the oil majors, they audit this in a very strict way, because what they want, of course, to admire is that their name is connected with one of the accidents.
Mm-hmm. I can imagine. And maybe with that topic in mind, I wanted to ask you, that's diverging a little bit away from finance, but how does the industry handle things like Somali pirates that we've been hearing about in the news for the last couple of years? Maybe you could shed a little bit light on what's happening there, especially that you just made a comparison between different industries. And obviously, these types of issues do not happen with airplanes. However, in the shipping industry, it seems to be awfully common that these things happen. How is that possible? And maybe how do the investors also handle events like that?
Yeah. So usually the piracy is an issue that is mainly an issue around the continent of Africa. Somalia is famous for it, to be honest, in a negative way. And you have to just keep in mind, for example, there are a few vessels that are traveling quite slow. And for example, when you take a bulk vessel, that is not really running fast. And also when the bulker is fully loaded, it's quite easy to enter from a small boat onto this bulk vessel. And so this is, I think, one of the reasons why it's quite easy to as a pirate, to hijack the vessel. And this, I think, the main piracy time is over already now, because there have been a lot of measures taken by governments. So, for example, a lot of marine vessels were active in these areas where we have seen a lot of piracy, And further, the vessels themselves, they have many of them have, they're just sailing through these areas with guards on board. So they are armed guards on board, so that they are able finally also to defend their vessels. And so this, of course, the costs increased by this, but it's much more expensive to pay for a vessel that is caught from pirates. And so I think this is something how it is handled at the moment. And the investors, I think they are not suffering so much under these aspects because, vessels are insured very well. This is part of the financial structure. For example, you have one insurance. It is the P&I insurance for the vessel. And then you have hull and machinery, P&I, when damage is caused. Hull and machinery, so that when you have an accident with your engine, for example, it breaks down, the reparation is paid, because you have to keep in mind we are talking about very large engines and that become very fast, very expensive. This is required by the lenders. Further, it's quite common to have an employment insurance, so that when you lose, for example, your employment because of a technical problem, might even be because of piracy, then your insurance pays for it. And the idea also regarding insurance coverage is since centuries common in shipping. They started already very, very early with the P&I clubs in London when freight was transported with old, large sailing vessels. It had to be insured. And so this is a very, very old business there and very traditional also. And I think so. It's not the problem of the lenders so much.
Mm-hmm. You've been working in this industry for a long time. You've been working in different positions. What is something that you're working on now?
So I see that a lot of the lending capacity is leaving the market, and also I have been working as a relationship manager for one of the large shipping banks in Hamburg. I've seen, or also for one Swiss bank, I have seen that good projects are on the market, mainly in the second-hand financing sector. And these projects were not able to find financing. And so they had to look for refinancing because the old lender wanted to reduce his shipping loan portfolio and the maturity came up. And so they had to look around to find alternatives. But many of them haven't had sufficient access to new lending capacity. For example, to lending capacity in Asia. And as I described, we see at the moment that there's a change in the market. European traditional shipping banks, let's say, adjusting their portfolios. Finally, this means they are reducing the portfolios. And new lending capacity from Asia is entering the market. And this new lending capacity from Asia also has no access to the ship operators that are based in Europe. And so I think there's what we see that we could help finally to bring these parties together. And this is what we are working now at the moment on. The company we have just founded for this is hhx.blue. And so we are still in the development process. We are not already operating, but what we want to create is finally solutions to connect ship owners with investors, a wide range of investors, not only traditional shipping, also alternative investors. And we want to offer also, especially for the alternative investors, some service where they are able to enter projects at a bankable standard. And I think this is very necessary to keep a bankable standard in all these ideas. And this is something what we are working on at the moment, and we already see a strong demand for it. This is a very, very interesting project.
Perfect. Sounds like you have your hands full with everything that's going on at the moment. So, Olaf, I would like to thank you very much for coming on the podcast. I hope our listeners enjoyed it. I definitely learned a lot about this industry. And yeah, thanks, and I'll talk to you soon.
Luke, thanks a lot for this opportunity, and looking forward to hear from you.
Perfect. Cheers.
Bye-bye.
Thank you for listening to the Wall Street Lab podcast. For the show notes and much more, visit us at www.thewallstreetlab.com. To see what we're up to before anyone else, subscribe to our newsletter on our website and follow us on Facebook and Twitter.
Disclaimer. Information contained in this podcast constitutes the opinions of individuals and should not be treated as investment, tax, financial, or legal advice. We take no responsibility for the accuracy of any statements made in this podcast. This podcast is for informational and educational purposes only, and it does not contain an offer to sell or buy any sort of financial products, and should not be treated as advertisement for such. Any copying, distribution, or reproduction of this podcast without the prior permission of the creators of the podcast is strictly prohibited.